There is actually a huge deficit that I found in what the center is supposed to pay to the states as per the Finance Commission recommendations. Between 2009-10 and 2024-25, close to 36 to 40 lakh crore rupees has been collected by the union government as cesses and surcharges, which essentially means they have been fully used by the center and not shared with the states. That doesn't behove well for the spirit of cooperative fiscal federalism. The government is not transferring all the cess and surcharge that it has been collecting into the fund or reserve fund for which into which this money has to be immediately transferred. Instead, it keeps with itself and uses it for other purposes. We don't know what purpose, but it uses it for other purposes, and CAG reports have provided numbers on this. There the center says you should have the prime minister's photograph there, you should have all the wellness centers painted with a particular color paint. Why? Right? So it is purely a politicized exercise on the eve of elections that is happening. If you want to uphold the real spirit of cooperative fiscal federalism, money given from the union to states must be untied and unconditional. That must be a very clear principle that we adopt. Propaganda machinery of the ruling party gets a full list of the beneficiaries and their phone numbers. The beneficiary got a phone call, and that phone call essentially takes the conversation to the point of asking votes for the BJP and the Prime Minister Modi in the upcoming parliamentary elections.
The issue of fiscal federalism has been in focus several times in the last few weeks, with at least two southern states taking up the Modi government and demanding for their share of the total taxes from the divisive pool. My guest today has found out something a little more than most people have been talking about. Professor Ramakumar is an economist, and he also teaches at TIS in Mumbai. And he's done some major number crunching, and he will talk to us about what he's found, which is even more alarming. First of all, thank you so much for joining us today.
Thank you, Pooja. Lovely joining you.
Before we get into the specifics, I want you to tell our viewers, in a nutshell, what is it that you found?
Well, it was something that started out of a pure academic interest in matters of public finance. And then, as somebody who is more of an empirical economist, we tend to look for the sources of data behind each claim that the government always makes. So to begin with, I was struck by a particular discrepancy between the different numbers cited by the government in the parliament itself in answer to different questions raised by the members. So, in reply to one question in 2022, the government put out a figure of 28% for the total amount of cesses and surcharges as a share of the gross tax revenue. And in answer to another question a year later, for the same year, the government cited a number of 18%. And that's a huge difference. 10% of gross tax revenue being the discrepancy, something huge. That's when I started digging a little bit more into the question. And I found that in very few places are aggregates of cesses and surcharges available. And what is also not available anywhere is what is a cess and what is a surcharge. Which item in the receipts budget is a cess and which item is a surcharge. Now, some items are called cess in their name itself, so it's obvious that they are cesses. But there are others, like, for example, there is an additional excise duty on motor spirit. That's actually a cess, but it's not called a cess. The name cess doesn't appear in the title. So you'll have to dig deeper into the definition, explanation, and so on, and finally you'll get it. So it's actually a very complicated exercise to aggregate it, and such aggregates were not available anywhere. And that's when the whole problem started. That whole doubt started as to whether the government is indeed not putting out the number for some reason, or is the ambiguity kept deliberately so for a larger reason. That's when I started digging into the budget documents in greater detail, and I actually found that the actual number that I got for the amount of cesses and surcharges collected by the center is actually much higher and very different from what the government admits. in different documents that it publishes. And that's number one. Number two is a question of devolution. So, how much does the center keep and how much does it give to all states? Now, the finance commissions essentially say that uh, it should be 42% as per the 14th Finance Commission report, and currently it's 41% according to the 15th Finance Commission report. And these recommendations are usually considered as sacrosanct. And the finance minister even said in the parliament that I keep it to the last word. I meet it to the last word. Now, which essentially immediately also came to me that if the amount of cesses and surcharges are different, then that also affects the amount of money that the center pays to the states from the divisible pool, because they are related. So that was the second question that I began to ask. Does it spill over into a problem there as well? And bingo, I found it. Yes, it does. And there is actually a huge deficit that I found in what the center is supposed to pay to the states as per the finance commission recommendations. That's the short of the story, and how the article got written and how the analysis got to be undertaken.
For the sake of our viewers, if you could explain the difference between cess and what is surcharge, and also the fact that these are taxes that are not shared by the union to the states, right? So if you could explain how that really
Yeah.
works.
So, if you look at the history of fiscal federalism in India, things have kept on changing over a period of time. So, if you look at the 1970s and 80s, the corporate tax and customs duties were fully absorbed by the center in the past, whereas other income tax and excise duties were the only taxes shared with the states. But then, by the late 90s, that changed with a constitutional amendment in the year 2000. And what the constitutional amendment of 2000 did was that it made all taxes of the union shareable with the states. Okay, so that was one change that happened. But there was another change which happened with the same year, where in Article 270 and Article 271, which lists cesses under 270 and surcharges under 271, they were to be kept outside the divisible pool. That was the idea. So cesses and surcharges will not be shared with the states. They will be kept 100% by the center. Now, coming to a question, what is a cess and what is a surcharge? A cess can be, termed simply as a tax on a tax, right? So essentially, there is already a tax, and you put a tax on that tax and call it cess. But a surcharge is different. A surcharge is something like an additional levy that you charge on an already existing on top of an already existing tax. So these two are different, as you can see. One is a tax on a tax, that is cess. The other one is an additional duty that is levied, which essentially gets called a surcharge. Their impact is the same. Both are levies of two different types, but the manner of their taxation is different. The manner of their application is different. That is a difference between a cess and a surcharge. But that's only a minor difference in what they definitionally are. But both are outside the taxes that are collected or on top of the taxes that are usually collected. One is a tax on a tax, and one is an additional duty on top of the tax. So that's the difference between cess and surcharge, and that's also the commonality between the cess and surcharge. These cesses and surcharges are not shareable with the states. They don't get into the divisible pool. They are kept outside the divisible pool, 100% used by the center. That is the problem, because if you remember, in 2015-16, when the 14th Finance Commission, headed by Dr. Y.V. Reddy, gave its report saying that 42% of the divisible pool should be shared with the states. That's the recommendation of the commission. The news recently that came out was that the Prime Minister directly requested Y.V. Reddy to reduce that 42 to something of a lower magnitude, so that the center can keep more. Now, obviously, Dr. Reddy did not agree to that suggestion by the Prime Minister, and it was kept at 42, which essentially meant that the government had to look for other means to augment its revenue, which need not be shared with the states. That is when the 2000 amendment was sort of dusted out, the cesses and surcharges were actually reducing till 2014 as a share of the gross tax revenue. But suddenly that was identified as a new source of revenue for the central government, and more cesses and surcharges began to be charged. The Swachh Bharat cess came, the Krishi Kalyan cess came, different road and infrastructure cesses came. Then later the agriculture infrastructure cess came. So all these cesses came one after the other and sort of accumulated over a period, creating a large magnitude of money collected by the center as part of our taxation system, but one which is not shareable with the states. Right. So the center has made enormous amount of money. My calculations show that between 2009-10 and 2024-25, close to 36 to 40 lakh crore rupees has been collected by the union government as cesses and surcharges, which essentially means they have been fully used by the center and not shared with the states. That doesn't behove well for the spirit of cooperative fiscal federalism in India. The Reserve Bank of India, for example, in its report on state finances in 2016-17, in fact, has noted this, officially noted this, that this is not a good tendency that cesses and surcharges keep rising. It is constitutional. It is not unconstitutional to have cesses and surcharges because it is expressly allowed by the amendment of 2000. But whether it is appropriate or not is the
So
question
I'd
to
read a
ask.
statistic that since 2014, since the Modi government came to power, cess and surcharges have gone up by 153%. Now, tell us how this can be used. Are there any strings attached, or the union government can use it how they want without even, giving any kind of accountability? Because they can name it as like you said, Swachh Bharat tax, cess, and other things. But does it mean it has to be used for that? And how do we know what this tax is being used for?
That's a good question. So what we just discussed was the collection of cesses and surcharges appear to be wrong from the point of view of cooperative fiscal federalism, but nevertheless it is constitutional, unfortunately so. Right, number one. But number two, the question comes, what you asked is very important. How and why is it used for? And is there any way to find out whether it is being used for an appropriate purpose or not? That's a very important question to ask. Now, according to our rules, cesses and surcharges must be after collection. Of all collections go to the Consolidated Fund of India. From there, it has to be transferred into a reserve fund. So each cess and surcharge has a reserve fund, which has to be parked outside the Consolidated Fund of India in the public accounts of India. So that's where your provident fund money and etc. all are there. So you have to park it in a fund there, and exclusively it must be used for the purpose for which it is collected. That is the basic idea behind the collection. But the Comptroller and Auditor General, over many reports in the past, uh, have again and again pointed out that the government is not transferring all the cess and surcharge that it has been collecting into the fund or reserve fund for which into which this money has to be immediately transferred. Right? Instead, it keeps with itself and uses it for other purposes. We don't know what purpose, but it uses it for other purposes. And CAG reports have provided numbers on this. For example, in 2023, the CAG report points out that about 52,000 crore was collected as cess, health and education cess in 21-22, but out of that only 60%, or close to about 32,000 crore only, has been transferred into the reserve fund, and that is called the Prarambhik Shiksha Kosh, which is the name of the fund for that health and education cess. Only 60% has been transferred, 40% has not been transferred. Now, similar violations have been noted for the research and development cess, where only about 9% of the money has been transferred into the fund allocated for that purpose. The Swachh Bharat cess, the road cess, Krishi Kalyan cess, all these cesses, there has been either no transfer at all to the reserve fund, or there has been a significant short transfer of funds into the reserve fund. So money that is being collected as cess and surcharge is not being used for that purpose. The CAG has very clearly pointed out, and some of these amounts are very large. In some for example, under the road cess, the total short transfer is about 72,000 crore on an accumulated basis. Okay, so these short transfers or non-transfers essentially mean that the collection of cesses and surcharges does not lead to their use for the purpose for which they are collected. This is a serious violation of account, not just accounting principles. It's also a bit of a fraud on the people. The people are being squeezed of more taxes, but it's not being used. They are being told that you're being taxed more through cesses and surcharges because we want to fund X, Y, Z, but it is not going to the financing of or construction of X, Y, Z in any form.
Your article also notes that CSS, that's the centrally sponsored schemes, have gone up, the percentage. Why is this problematic, if you can explain to our viewers? Because these come with instructions on how to spend them to the states. Why is that problematic and against
Yeah.
fiscal federalism?
So this will be the government's answer to my accusation. Basically, what I have said is that the government is not giving enough to the states in lieu of the state share in central taxes. That's my accusation. And that's what the Finance Commission is actually saying you must do. But the government is going to say that no, 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 that may or may not be true, but we are actually giving much more to the states via central sector schemes and centrally sponsored schemes. That's going to be the argument. I have sort of second guessed that response, and I've provided the answer in my article itself, and that is the following. Look, uh, the state share of central taxes that is provided by the center to the states is untied. It is not conditional on anything. It is the right of the states as per our constitution. The states can use it as per their wishes. That is exactly the spirit of cooperative fiscal federalism. But anything outside the Finance Commission recommendations, such as central sector schemes or centrally sponsored schemes, are tied in the sense, some of them, for example, if you are talking about capital transfers and all, they are loans given by center to states, so they have to be repaid by the states to the center at some point of time. So they are not in any form a one way transfer. The other, some of the grants that are provided to local self governments by the union government, they are very clearly tied to reforms that the local governments undertake vis-a-vis some of their collection of revenue collection practices and other accounting practices of theirs. Coming to the centrally sponsored and central sector schemes, here it is it is considered as something like a father giving a pocket money to children going to school. Instead of considering it the state's autonomy to get that money and to spend for its people as they please, it is the guidelines are something like one size fits all. These guidelines are provided by the center for all states in a uniform manner. Now, I'll give you one example. There is a scheme in the irrigation department called Har Khet Ko Pani. Okay, it's an irrigation scheme where the center provides money to states to dig ponds in rural areas. Okay, for irrigation purposes, but uh, there is a conditionality there, which is that each pond that the states construct must be of a minimum size of 13 acres. Right now, uh, why is that a condition? It's unclear. I come from Kerala, which is a very highly densely populated state, and the Kerala's irrigation department found that it simply cannot find 13 acres in a rural area to dig a pond. And and it can be 3 acres, 4 acres, one can understand, but 13 acres is a significant area in a densely populated state like Kerala. So for years they have not been able to use the money under Har Khet Ko Pani. So what is the point in saying I am giving some money under central sector schemes? Now come to some other schemes like Ayushman Bharat Wellness Center. Right there, the center says you should have the prime minister's photograph there. You should have all the wellness centers painted with a particular color paint. Why? Right, so it is purely a politicized exercise on the eve of elections that is happening. A third example I'll give you, again, I'll cite Kerala because it's something that I know better of. Uh, there is a scheme called Prime Minister's Awas Yojana, where the Prime Minister, it's a central scheme where about 75,000 rupees is given to build a house. Okay. Now, 75,000 rupees is, 75,000 rupees is simply inadequate to build a good, decent house for rural households. So the government of Kerala adds close to about 4 to 4.5 lakhs from its kitty to that basket, combines the two, and gives a house to the rural households. So about 4 lakhs is spent by the state government, 75,000 rupees is spent by the central government. Yet the central government wants the prime minister's photograph uh, uh, as a part of a labeling exercise in front of these houses. So these kinds of these, so state governments obviously will say, who is spending more? I'm spending 4 lakh. You are spending 75,000. Why should I put your photograph there? These problems have come in different schemes. Prime Minister's Fasal Bima Yojana, which is a crop insurance scheme. At least 4 to 5 major states, Bihar, West Bengal, Gujarat, including Gujarat, by the way, have actually opted out of that scheme, saying that these guidelines are not suitable for us in our agriculture ecosystems, and they are funding their own crop insurance schemes. That's a central scheme, right? So essentially, to say that we are putting more money into central sector schemes and centrally sponsored schemes simply doesn't wash, because they are not equivalent in any form to the untied transfers as in the state share in central taxes. If you want to uphold the real spirit of cooperative fiscal federalism, money given from the union to states must be untied and unconditional. That must be a very clear principle that we adopt.
Another quick question on CSS. There's another danger that it can be given to politically important states. And, since you did give examples from Kerala, one anecdote we've heard is that Ayushman Bharat scheme, the Kerala government had to opt out of it because they insisted on using Hindi in rural Kerala as well, something that the state government thought is not feasible in a state where not too many people speak Hindi, because of which they couldn't use the funds that came. So these are some of the challenges, and it can be used for very, very political purposes, isn't it?
Not just that, I'm going to stick my neck out and say that the propaganda machinery of the ruling party gets a full list of the beneficiaries and their phone numbers of these schemes. I don't know how they get it. It's obviously given to it by a vested interest, and each beneficiary gets a phone call. Recently, I heard a recording of a phone call which came from an unknown lady to the beneficiary of Prime Minister's Awas Yojana, the 75,000 lakh contribution, that problem that I just mentioned. So a beneficiary got a phone call, and that phone call essentially takes the conversation to the point of asking votes for the BJP and the Prime Minister Modi in the upcoming parliamentary elections. So all the requirements of labeling, the leaking out of the beneficiary names and their addresses and phone numbers, all of this point to the fact that the central government wishes to see the design and implementation of central sector schemes and centrally sponsored schemes as a politicized exercise. Remember, earlier there was a planning commission which essentially, according to earlier the Gadgil formula, later the Mukherjee formula, and so on, fixed some amounts to states based on criteria that apply to different states. But after the demise of the planning commission and its replacement with the very skeletal Niti Ayog that we have, the problem is that the whole decision making exercise, which was earlier under the planning commission, has now been transferred to bureaucrats under the Ministry of Finance. So essentially, now Ministry of Finance allocates funds to states under different plan schemes, which essentially means that it has become a thoroughly politicized exercise. Suddenly, you see that the payments under certain central sector schemes increase in certain states where elections are due. Right? In other cases, the Prime Minister goes to those states and declares special packages for different groups. In Madhya Pradesh, he recently went before the elections and declared a scheme for the tribal population there. All from, so who made that estimation? On what criteria does Madhya Pradesh become eligible for it, and not say Chhattisgarh or Jharkhand, which are equally Adivasi populated states? So these are very political decisions that are coming out nowadays uh, after the demise of the planning commission. That too must be added to our discussion here.
I want to wrap up by asking you a two-part question. What is the total number that you found in terms of the discrepancy, as opposed to what the union government is claiming, and what you found? And the second part of my question is a little bit of hypothetical, if you can indulge in. The 16th Finance Commission recommendations are expected to be out this October. So, what do you expect? Do you expect this trend of the union government keeping more money with itself also increasing in the next report?
So, okay, to answer your first question, I found that if you calculate cesses and surcharges appropriately and create an accurate divisible pool and check if the center has been giving enough money to the states as per their share of central taxes, I find no. For example, as an average, I found that during the 14th Finance Commission period, where 42% was to be given to the states, the average given was only about 40.3%. And under the ongoing 15th Finance Commission period, it's actually even worse. It is 41% as stipulated by the Finance Commission, but what is paid is only 38.1%. Right? So the difference is actually widening. And if you cumulatively add all this, the deficiencies in payments from the center to the states, only as per the Finance Commission recommendations, I get a cumulative total of close to 5.6 lakh crore rupees. That is the total amount in addition to cesses and surcharges, which I said was close to 36 to 40 lakh crore rupees. In addition to that, what is actually uh, payable to the states uh, as per FC recommendations is and not paid is cumulatively coming to close to 5.6 lakh crore rupees. And that is the money that I think the Finance Commission, the Finance Commission that is going to come, the 16th Finance Commission, must take note of, and states must be compensated for this historical wrong and historical loss in some form. Some kind of lump sum grants must be provided to the states as per a formula, and the center must be made to pay for what it has not paid. That's the first point that I would like to make. Coming to the larger question of what the Finance Commission must do, I think both problems of vertical devolution, that is center and states, and horizontal devolution across states, both must receive urgent attention, serious attention by the 16th Finance Commission. What I mentioned is problems of vertical devolution. But if you more closely see the demands of different states, Karnataka, Kerala, Tamil Nadu, etc., they are complaining about the formula used for horizontal devolution. Now, there the problem is, are we penalizing better performing states and providing more money to less performing states? Now, can you? So, I think in my view, the 16th Finance Commission must look at a new principle of justice uh, uh, in uh, providing resources horizontally to states, whereby the states that have lost out, Tamil Nadu, Kerala, Karnataka, and so on, must be ensured a certain minimum of the devolution, and it must ensure that if at all there is a fall of devolution below a certain minimum, there should be separate grants, that too unconditional, to be given to the states to compensate for that. Now, there has to be some method that the 16th Finance Commission must arrive at in order to justly resolve the problem or complaints related to horizontal devolution. It can be of multiple types. Either the formula can be changed, or grants can be provided to compensate, or certain minimums can be set for what each state gets, and ensure that it doesn't fall below that minimum. There are multiple ways that the Finance Commission can explore, but it simply cannot be blind to the problem. It simply cannot ignore the problem. It is a very serious political matter now, and it must be one of the most important and one of the most initial things that it sits down to resolve when it begins to meet.
Thank you so much for speaking to us. And I also must congratulate you for bringing out these numbers. We know that it's not easy because there is so much of opacity. So to actually go through the data put out by the union government and bringing this out is no easy task. So I congratulate you on that and thank you for joining us again.
Thank you, Pooja. Lovely talking to you.